Don't look now, but there is a financial revolution taking place on the blockchain, and actually some major financial institutions are leading the way. Blackrock has really embraced the blockchain with a couple of new products, and Coinbase and Circle are playing a major role in how those products work and how we could eventually start trading securities, bonds, and all other kinds of assets 24/7 on the blockchain. So I want to dig into exactly what we found out last week, how this plays into Coinbase's business. And then at the end, I'll get to how interest rates impact Coinbase, because that's going to be another tailwind heading into first quarter results, which will be out in the next month. My name's Travis Hoium. Thanks for watching Asymmetric Investing. Please subscribe here on YouTube for all my content. And thanks to this video sponsor, The Motley Fool. If you go to fool.com/ASYM, they'll give you their top 10 stocks to buy right now. I want to first go to the recent announcement from BlackRock. This is a new smart contract from Circle. Circle is the company that helped introduce the USDC token with Coinbase. They owned a 50-50 share of the Center Consortium that not only founded the USDC token, but also ran it until last year when Circle took that over, and then they have a revenue share agreement with Coinbase. A little bit of a complicated structure, but what you need to know is that Circle runs the USDC stablecoin. They run it, Coinbase gets a benefit from it. So greater adoption of USDC, great for Circle and good for Coinbase. But they announced that there's a new smart contract that will allow the holders of BlackRock's USD institutional daily liquidity fund to transfer their shares to Circle for USDC tokens. The smart contract provides investors with near instant 24/7 off-ramp that brings to bear the core benefits of tokenized assets, speed, transparency, and efficiency. There's a lot to unpack there, but I think really what you're seeing is after the launch of this fund on the Ethereum network, which I'm at the press release here from March 20th when this fund was launched. What this really was a test of using the blockchain for a financial instrument. What Circle is doing is providing liquidity, a liquidity fund. In the crypto world, you would normally call that a liquidity pool because a whole bunch of people can put money or tokens into the liquidity pool, and then the pool runs itself, playing the role of the market maker, and there's the ability to buy or sell at a given market price. And so they're taking some of those same concepts from the DeFi world, as it's known, and putting that into the traditional finance world, but on the blockchain. And I think that's what's really interesting is that you're starting to get major financial institutions to start to implement the things that have been kind of just these crazy dark places in the crypto world over the last 3 or 4 years that have now developed to the point where BlackRock is taking notice. Circle's co-founder and CEO said that tokenizing assets is but one important dimension of solving investor pain point. USDC enables investors to move out of tokenized assets at speed, lowering costs and removing friction. We're thrilled to provide this functionality to investors. And the number of use cases is really tremendous for this kind of technology. One of the reasons I think this is so transformative in the financial markets is liquidity is often a challenge for a lot of more obscure products. If you're trading stocks, particularly stocks that have a lot of liquidity, so bigger market cap companies, it's pretty easy to find a buyer or a seller depending on what you want to do with that. It's like there's plenty of market makers in those products. But there's not nearly as much liquidity in something like the bond market, where products might not be traded nearly as much, might be a little bit more obscure. So that's where you're going to go directly to some sort of investment bank to try to make a market for you, try to find a seller or a buyer. That's where a lot of these big banks make money because they're providing that service for their investors. But these are also tools that can be moved to the blockchain. There doesn't need to be a person involved sending text messages and making phone calls. That's literally the way that it still works today. This could be a market where every debt security is on the blockchain and there is a liquidity pool associated with each one. That could make the system both lower cost from a transaction perspective, more liquid, and more transparent, because remember, those trades are going to be happening on the blockchain. Now, we're taking baby steps in that direction. There are trillions of dollars that could move to the blockchain, whether we're talking about stocks or whether we're talking about securities like bonds or real estate assets. And we're just in the early innings of this transition happening. But that's why I think BlackRock starting this fund, Circle providing the liquidity pool are so important, because there's steps that need to be taken to legitimize the blockchain and legitimize cryptocurrency. And BlackRock is doing exactly that. The second thing I want to touch on is interest rates, because the USDC token is backed by actual assets, and in particular, assets that are in bank accounts or are in treasuries generating interest. That amounts to now hundreds of millions of dollars per year, approaching $1 billion per year for Coinbase alone for their stablecoin revenue. Circle is the partner, the other 50% owner, and now runs the USDC token. It's also possible that they're going to go public in 2024. So it's worth thinking about exactly what sort of opportunity there is there to get a little bit of a head start if they do IPO this year. Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/ASYM for the top 10 stocks to buy right now. I'm going to start with this chart of the 10-year Treasury security rate, and this is from the St. Louis Fed. So you can see that this goes down to 0.5, 0.6% in the middle of 2020. That was when things were at their lowest. But let's compress the timeline a little bit here to 2023. Now rates are at 3.8%, climb all the way to nearly 5% at the end of 2023. But then rates started to drop earlier this year. And this is one of the things that the market was reacting to pretty positively. Stocks went up, crypto actually went up. But now over the last couple of months, we have seen an increase in interest rates, and a sharp increase in the last week or so. We're now at about 4.55%. What this means is that the USDC token and the treasuries and the interest-bearing assets behind it are going to be making more money in the second quarter when interest rates are higher than they were in the first quarter of 2024. So this is going to be an increase in revenue. Just how much revenue are we talking about? This is Coinbase's numbers, and this is the last 4 quarters of stablecoin revenue. 145.7 million going back to Q4 2022. That was up to 171.6 million in Q4 2023. But the other thing to keep in mind is the amount of assets that USDC actually has. And here's where you can see assets rising sharply from about November of 2023. We're at $24 billion worth of assets in USDC. Right now, that is over $32 billion. So there's going to be more money generated in revenue and from interest because interest rates are higher and because USDC has more assets. These two factors are going to work together for Coinbase and Circle to make this a much bigger revenue stream for them. But what really makes this sticky is if you're ultimately building more utility, having more assets on the blockchain, specifically using USDC and using the infrastructure that Coinbase and Circle have built. If we start to move billions or even trillions of dollars worth of securities onto the blockchain, creating things like liquidity pools, and USDC is the token behind it, and is the dollar equivalent that's being used as the intermediary for exchange for a lot of these things, we're going to need a lot more than $32 billion in USDC token market cap. We're going to need this to be hundreds of billions of dollars. That's a massive tailwind behind a company like Coinbase or Circle. So these funds coming out from BlackRock may seem like small things, but they're really proving a concept that the blockchain has been moving towards for a very long time. And I'm extremely bullish about this being a better way to do financial transactions and make markets in a lot of cases. And the advantage for companies who are building the infrastructure and providing the tools behind it, like USDC, like the crypto wallets and apps that Coinbase have, I think are going to be phenomenally profitable tools long term. So don't overlook these developments that are happening on the blockchain today, because a decade from now, this is what's ultimately going to drive these companies' value. But what do you think about what's happening with BlackRock, Coinbase, and Circle? Leave your comments in the comment section below. Don't forget to subscribe to Asymmetric Investing. Thanks for watching, everybody. See you here next time.